Now we're on to the next one, and this is one of the most, I think, important topics when it comes to any technology aspect. Security and accessibility. And this is an amazing panel, and I would like you to give it up for the moderator for the session, Angus MacCormick, who's the managing director for Settlemint. Angus is a seasoned expert on security, and I'm sure it'll be a blast. Angus, the floor is yours.
Yeah, thanks very much. And I'd like to welcome with me to the stage Neal. Lewis, would you like to come on down? Lewis is an entrepreneur and the CEO of Kryptic. I'd also like to invite Brian Gallagher. Brian Gallagher is the co-founder for blockchain Partisia, based out of Switzerland. So it's my pleasure to be here to talk about security and accessibility and the future of digital assets. So why is it important? Why should we care? And what's happening? So I'll kick off with Brian first of all, and let's make it quite provocative. We heard the previous session there. So why should we care about security? What's happening, in your opinion?
Okay. Well, yeah, broad topic, so a lot of different areas you can cover. I think I'll just start with the areas of focus that we spend the majority of our time on. So from a security aspect, Bitcoin is the most secure network. It's proof of work. There's a lot of drama around the energy and consumption that proof of work consensus models require. So as you see today or tomorrow, ETH will merge to ETH 2.0, which will be proof of stake. And there's a lot of debate. Will the network be as secure as it was previously when it was proof of work? And Partisia blockchain is a proof of stake network, so we understand that it is. You can have 15,000 different nodes on a proof of stake network, but what if 1/3 of those are running on AWS cloud servers? How you doing? Recognize my friend in the front row. So the real question is it centralized if there's 15,000 different nodes, but 1/3 of them are running on AWS, let's say another 1/3 are on Microsoft Azure. And so as we're building out our own network, we see this happening. We see that node operators are leaning towards a service called Contabo because it's fast and it's less expensive than some of the competitors. But when we had on our testnet an outage from Contabo, we saw some issues with our blockchain. So from a security perspective, we're seeing new issues with proof of stake and the centralization of different clouds. And then accessibility is a whole other topic, so we can maybe
come back to accessibility in a minute or two with Brian. So you went right to the root cause of some of the security issues we're facing just now. So passing that over to you, Lewis. How do you see things pan out from a security point of view?
So my main thing with security, I like to start with quantum, because a lot of people don't think about quantum right now, but it's here. I'm a believer that it's here right now, and I think a lot of projects and a lot of things that's out there in cryptocurrency or digital assets in general needs to be future-proof because it is here. And a quantum computer is a high-output computer that can simultaneously factor numbers. And if you know encryption or any type of data, pretty much numbers can be factored simultaneously, meaning it's vulnerable. Public and private keys is numeric, numbers, right? So these computers might be able to break, into public and private keys, which is a vulnerability in my opinion. But so I like to focus on things that's future-proof. So one thing that can solve that problem is not splitting the keys. In my personal opinion, is getting rid of them in general. The data never exists, and that's a way to, pretty much solve that problem.
Okay, so going back to accessibility, Brian, how is accessibility going to go in the future? What's the mega trends as far as you're concerned?
Yeah, just to finish on Lewis's point, Google did put out an article about a year ago saying that their quantum computer would be able to crack Bitcoin within 2 years. So who knows? Maybe one day they'll just crack it. Our cryptographers don't think that will be the case, but there's a big argument to be had, so it's a good point. Talking about accessibility. So this one's really interesting because we see stablecoins gaining extreme market share. So I think only a couple of years ago, I remember Tether was like a $3 or $4 billion outstanding market cap. Maybe this is around 2017 or 18. And now I just saw, I mean, it's 100 billion plus between USDC and Tether. And we just saw that when the Tornado Cash sanctions happened, the Circle company froze a few of the addresses that were holding their USDC. So that's essentially just a bank freezing accounts. So from a decentralization standpoint, there's almost nothing different than the way that these stable coins function versus the traditional banking system in terms of control and middlemen. That being said, accessibility is amazing, particularly for people in the Philippines or Brazil. One of the applications we've worked on delivers micro rewards to anybody who participates in this data economy. And we basically see the majority of the usage in the Philippines or Brazil. And so it's actually bullish for the US dollar more than crypto, because the US dollar is actually becoming more of a global currency than it already is from a retail perspective. So, in the Philippines, the only way you would get your hands on a US dollar is cash on the streets. But now with these stable coins, we're able to deliver $1, $2, $5 at a time anywhere on the planet, instantly, pretty much. That being said, things will change. It won't just be allowed, in my opinion, for these stable coins to just freely be moved. For example, you can permission or whitelist smart contract functions. So I foresee in the near future, not even the far out future, that people like Circle will be required to have details on account owners, just like a bank account. So if you have a public key that's holding USDC, you won't be able to use that currency in certain markets on the blockchain unless your address is whitelisted by a smart contract. So the days of the free-for-all money flying around representing a US dollar that's apparently in a bank account won't last very long without restrictions, and it'll be similar to typical banking requirements, in my opinion.
Lewis?
Yeah, and I'm gonna keep it short and sweet. When it comes to accessibility, in my personal opinion, I think we have to relate to certain regions of the world, because every region of the world, from a user perspective, gets into cryptocurrency or digital assets different. I know in South America, like you said, like in the Philippines, cash. In South America, a lot of people use cash to get into cryptocurrency. So if we develop products that are, helping people in different regions of the world, specifically for that region, something that they can relate to, that'll get them more accessibility to get into this industry, to do the things that they want to do. That's my personal opinion on that.
Yep. Well, so we're talking about accessibility. Let's talk about what you're actually going to do to address some of those things, and where you think things are going to be in 2 or 3 years' time. So, Lewis, what are you focusing on just now?
So repeat that question.
Where are you going to be in 2 or 3 years' time, bearing in mind these trends? Where will you be in 2 or 3 years' time with these trends, and what are you going to do about it?
What am I going to do about it? So right now, obviously, I'm developing Kryptic. It's a one-wallet solution to basically make multi-chain, wallets more easy to use, because in my personal opinion, in DeFi right now, it's more complex for, a lot of the mainstream retailers to understand. So I feel like you need to take centralized products and figure out a way to decentralize it, to where it's easy to use, because in America, more people are used to Cash App, Coinbase. To get into cryptocurrencies, that's easy, right? But in the decentralized space, it's not as easy as a Cash App and Coinbase. So if we can, decentralize these types of products, it'll, make this market go a lot better, in my opinion.
Sure. For us, Partisia blockchain is addressing 3 problems. Scalability is the first one. So we're using sharding at the protocol level. That's where Ethereum is trying to get to in their next update after the merge. But that's not really what we're talking about here. Security and interoperability. We take a decentralized approach to bridging. So a lot of the bridge hacks that you've heard about have occurred with bridges who are controlled by a small multi-sig setup of maybe 5 parties, for example. Our bridge basically does a secret key sharing scheme using multi-party computation cryptography. So we have hundreds of node operators secretly sharing a piece of the keys that control assets that come across bridges. So we think we've built the most secure bridging solution for both assets and data. But from a accessibility standpoint and sort of use case standpoint, what we want to get to in the next couple of years is, one, bringing new DeFi use cases from the real economy onto blockchain. So trade finance is a good example. We have a big trade finance project that's coming on that essentially allows anyone who's a typical DeFi, let's call them the DeFi apes who lend into lending pools for farming of random coins. We're going to have that for trade deals. So $2 trillion a year doesn't get financed in trade deals because it's basically a tough financing product to receive from banks. It's a very limited market. So if you're a toy importer in Ethiopia trying to buy a large shipment from a Chinese vendor, no one's going to provide financing, even though you could be a very qualified vendor with a good history and track record. So we want to open that up to the DeFi economy and let people start lending into these 60 or 90-day trade deals, which typically yield 13 or 14%. So it's in line with the risk tolerance that you see amongst other lending. So we're trying to bring on like mainstream economic use cases onto the chain. And so, another big like accessibility thing is payments. You don't want everything on the public blockchain. So we are able to coordinate private stablecoin networks. So if you are a whitelisted, approved person to use a financial product, you could have a huge vendor network trading stable coins inside of a private smart contract on a public blockchain. So there's still auditability and regulatory compliance, but the ability to conduct commerce on chain publicly without private networks that require, private settlement. This is a public blockchain with public cryptos.
And I'm gonna go back on that. We basically integrated a technology called key shadowing technology within the wallet. So basically, it's a company that I invested in when I was in college, and basically, it's key shadowing technology is it's patented technology, quantum immune. Nice. It destroys any underlying data. So any public and private key or any seed phrase, basically somebody will have the opportunity to create a wallet like regularly, and also, or they can click quantumize and it'll quantumize the data so it never exists, and then they're giving shadow keys. So the only way you can revive the wallet is to bring the shadow keys back together, but the underlying, public and private key or seed phrases never exist. So it helps people not have to worry about losing their seed phrases or passwords. And then also, one thing that we're gonna be implementing is a wheel service with this technology, to where in a decentralized space, if you die or anything in that nature, you will be able to digitally designate your wallet to whoever you want to.
That's cool. So with your wallet then, is it a much easier user experience because
Correct.
You don't need to worry about writing your private key or saving it somewhere?
Correct, because that's the biggest problem.
That's a big problem with accessibility for sure.
Yeah, and I feel like it's not, it's more so the people that's building the product's fault, because we should know that it's not easy to use, True. And so that's why I feel like that's our duty, and that's our main focus is easy to use and security.
Yeah, that's super important. So that's cool.
So what do you think is going to happen on the wallet level around regulation? Brian, have you got any opinions on that?
What do I think should happen with regulation?
Yeah.
Again, I kind of keep going back to just the governance over public keys. So right now, anyone can create a public-private key pair, move assets in or out of their wallet. But as that continues to develop, I just imagine that the Treasury and the central banks and the different various financial regulators, they're going to start requiring information from vendors on the public keys. We're already seeing it. I think Coinbase, even in some markets, is already doing this. I think maybe Canada is one. I could be wrong. But they're requiring you to announce who you're withdrawing to. So when you put a public key to withdraw your ETH and send your currency, they're saying, who are you sending this to? And they're taking notes on your transaction. So I just think that we're going to, unfortunately, get more and more in that direction from the regulatory side of things, where basically just every transaction is going to be monitored and documented, similar to the bank. And anytime you're sending money to someone, and there's a record of it somewhere, and everyone knows who's involved. So this is, I think, just a similar trend, unfortunately.
And I feel like we should keep attacking that narrative, and keeping things decentralized in that way, and so you don't have to withdraw, right? Make these products more mainstream to where you can use it on an everyday basis.
Yeah, if we get wallets like yours that are easy enough to use, then it's a bit more, feasible. But right now, the new user typically just starts with Binance or Coinbase or one of these other exchanges, unfortunately.
Yep, that's going to be interesting to see how that pans out in the next couple of years. So going back to the blockchain, particularly to begin with, are you really sure that the layer ones we've got today will be up for the job when it comes to what's required for centralization for the future?
Good question. Yeah, I think some of them can. I think the main thing is the node operators are going to receive a lot of pressure, and it's hard. You can't hide your node. I mean, like they say nodes are anonymous. They're really not. It'd be very easy to find where the server is and figure out who's operating it if the feds really wanted to do that. So I think that's where you're going to see a lot of pressure because, Tornado Cash is just a perfect example. They sanctioned a smart contract. Typically, sanctions are limited to entity or person, but this was a piece of software. That would be like, I'm sure on WhatsApp or Snapchat, for example, illegal pictures and videos have been sent through those servers. They didn't sanction those servers and that company, but sanctioning Tornado Cash means that they probably should, because that's not a fair treatment. It's not equal. So just because someone abuses a piece of software, does that make everyone else responsible? And that's kind of the precedent they're setting now. And where it really falls back on is the node operators, because they're the ones who facilitated the transaction and received the financial reward for doing so. So although these proof-of-stake networks are up for the job in terms of speed, reliability, and they're getting better each day, it's going to be difficult for the node operators to battle through because the Tornado Cash team got arrested. I mean, by those standards, they could sanction. The Bitcoin blockchain has illegal images on it as we speak that people submitted. So every node operator who's ever run miner in this case, who's ever run a mining rig and downloaded the entire history of that blockchain is technically sort of possessing illegal content. So if they really wanted to, they could go and just raid every single miner and say you're doing something illegal. So I think that's where the big fight is going to be, is it's going to be the node operators. They're going to have a lot of pressure when they run these networks because they're the ones receiving the payments and they don't have information on the transactions they're facilitating. And there's plenty of existing laws that, banking law, which would technically require them to have that info. One particular one that's interesting is there's a law in the US where if money is obtained by illegal means and then the next people receiving said money, let's say from a drug deal down the line, that money can be repossessed and doesn't belong to the future owners. So there's actually markets that for newly mined Bitcoin that are selling at a premium versus existing Bitcoin in the market because it's newly minted Bitcoin. We know it never was involved in any illegal transaction that may be under investigation from the past. So that's going to be the big challenge, is these node operators who are facilitating everything.
And I think, regulators should be educated and then have an open discussion on certain things because I don't feel like you can regulate technology. It's more so the bad actors of it, right? So I just feel like there should be an open line of discussion as far as, these things that's happening. Because I think Coinbase just filed a lawsuit against the U.S. Treasury as well. So,
So Lewis, just to close out then, how do you see the future of digital assets?
What I would like to see, especially in the Web3, I would love to see, companies like Amazon, right, where you're able to just buy directly from your Web3 wallet online, to purchase goods. Mm-hmm. So that's what I would like to see. I would like to see things that are mainstream, and it just automatically connects, right? AR, VR, all of these things, from a decentralized perspective.
Yeah, I think that there will be an NFT marketplace coming out soon from one of the big players. I won't say who, but I don't know if they're going to let you buy from MetaMask or make you deposit, like an exchange. So that'll be interesting to see.
Wow. Certainly interesting if that happens.
That'll be a very big signal to what Lewis is hoping for, whether or not they're looking to get involved in that side, meaning just, no custody, just pay right from your self-custody wallet, but we'll see. I have no idea what the...
It opens up an entire can of worms.
Yeah.
It
does.
Well, that's great. So any closing points you'd like to make, gentlemen? And indeed, if there are any questions from the floor on security or accessibility, we can take a few questions. But over to yourself, Lewis, for closing comment.
One thing I want to say, I would love to see more people from, the athletic space in this space because, a lot of people that are in my industry, we have direct relationships, with the communities. And, we can educate people on this space instead of paying, athletes and influencers to just promote. I feel like we should really just educate so that way they can educate the people because we have that direct influence.
True.
And it's especially from, the products, the utility, and the security aspects of things. So that's my closing remark.
Access for everybody through education.
Yep.
In closing, I'll say I'm fully on board with Lewis here. People need to make products that make user experience easier. It's too difficult to use self-custodied products on blockchains. Even for myself, who's been around for the last 8 years in this industry, I hate doing it. It's a pain, and it keeps you up at night. What if I lose something? So all for that. And, happy to support any way I can.
Most definitely.
Great. Well, listen, thanks very much to Brian Gallagher and Lewis Neal. Feel free to take any questions. If there's no questions, we'll pass back to Olga for the next session. Anybody got anything they want to raise? Nope? Okay. Cool.
Thanks, everyone.
Thanks very much, everybody.
Thank you. I think
care.
difference on any technology topic. Thank you, guys. Thank you so much. Enjoy the rest of your day.